The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And if you're trying to get in the den today, we've got a little bit of a technical issue. We're trying to clear that up as fast as possible. So we're going to try to do this transmission through another means for the online and mobile transmission for visuals. So hope you guys are able to bear with us. We're going to take a look immediately at the dollar. This is one, first of all, you know, we try to cover quite a few things that are going to affect drilling ultimately down into the U.S. stock market. Looking at the dollar, 95.65, what do? We hit a high of 95.67. So what is that? 2 cents off the weekly unfair high, and we've come off of there. I was a little concerned because it didn't seem to want to kind of get there and then really pull back off of it. And what we're noticing now is, this could be considered a little bit of a consolidation around these unfair highs. I'm not so sure that it's time to really get short the dollar. But again, we had some targets reached. That was, hey, you know what? We got back above 94.12.13, had a weekly close within that fair auction. And usually these fair auctions are completely, traveled, expanded into the other side of the box, so to speak. So that's happened with the dollar. We kind of backed off a little bit, not terribly that much. And what's going on with the daily, we're kind of having these hints of a new profile attempt to appear. That'll be a little bit more new supply-ish up top. So, that will be another, overhanging supply issue for the dollar. So again, I don't know if we're going to kind of poke through those unfair highs anytime in the next, tomorrow's Friday. We're going to have to keep our eye on weekly closes. The thing that's going to get me really excited about going along the dollar again is getting back above 95.65 on a weekly close. So that's the story there. We're going to hit the NASDAQ really quick. And this is the deal in the NASDAQ, 4508. This was, an index that was underperforming the S&Ps without question. You're coming up into finally those weekly unfair lows, 4508 on the NASDAQ. We talked about doing, for a couple of days in a row there, and we had Steve Banger on about 2 weeks ago. We were talking about, what's the play on these U.S. indices right now, where the contraction and volatility, the VIX kind of creeping below 15, and sitting where it was. Mixed bag on the breadth. I was saying, put a gun to my head, I'd rather be short, but how do you take advantage of this kind of contraction and volatility? You buy a strangle, you buy premium. So if you'd done that, you've definitely got something laying in your lap right now on the S&Ps, and the NASDAQ's going to act to some degree accordingly with what the S&Ps are doing, or vice versa. So here's the NASDAQ. Really looked at this. 4288 as kind of Custer's last stance on the intermediate with this. It obviously kind of bounced off of there and then broke out above 4356. I know you don't want to know what has happened. You want to know what's going to happen. And right now, in my opinion, you've got a serious lid you can play defense against on the NASDAQ, 4508. Okay? So on the S&Ps, showing that, the S&Ps are quite a bit stronger index than the NASDAQ. You got 2083 sitting here. We kind of poked our head above this. I actually tried to pick a little trading battle around 2083 yesterday. It got there, just kind of spun around for a while, didn't want to get away from it. I probably could have saved myself a couple of points and saying, this doesn't look right, but I ended up getting stopped out of this trade. So trading 2090, a weekly close above this 2083 is going to be incredibly powerful. Here's the daily, nothing really standing in the way after 2073. So, what's the outlook on this? I tell you what, it's in my opinion, and I'm not trying to make excuses here, but the treasuries are sitting where they are. It is what it is. They're not really telling the story that it's okay to get back in the stock market yet. I'm looking at this. I may be wrong, but I'm looking at this to some degree as a little bit of a short squeeze. A lot of folks were kind of thinking this was going to go a lot lower. And that volatility play we did, buying the strangle, if you did that, would allow you to start kind of hedging this now. How do you do that? You could sell some calls up top against it. You could sell the calls outright that you already have and just keep the puts as a free trade and actually have already banked some rewards. Rewards? What was that, the Trivago commercial? I can't remember. Anyway, so as we look at the S&Ps, I'm kind of sitting tight on this. I mean, the internals have turned north. I will admit that. I'm going to go into the scanner after the break and kind of show you a little bit of that. But a weekly close above 2083 is going to pretty much put a stake in the heart of shorts. I mean, that's going to be something now that if we get a weekly close above 2083, and I'm just kind of sitting tight right now, not really going short or going long, close above 2083 is going to be some head scratching moments for shorts over the weekend. And if we come back into that area, they're going to be thinking, okay, wow, I played this wrong. Should I cover it? That could be a feeding frenzy, regardless of whether it makes sense for the market to go up or not. So just keep that in mind. And if you're watching, I think our den is, maybe I should go in the den. All right. I'll try to log into the Tiger's Den after the break, guys. I didn't think it was up, but maybe it's up. And I'm going to start talking like the guy on the Trivago commercial. Here we go. So let's go into the dashboard really quick. As you can see, the internals got incredibly strong. I want you to see this spike. That's a pretty serious race away from the norm here. We were kind of getting slower, pinching in. Middle ground was actually climbing. That's another, we didn't talk about this a lot, but when you have the middle ground just getting super populated, over 50% of the stocks in the S&P started becoming the middle ground. Again, that's a real big non-directional situation. You have had this higher, of course, but that means we're pretty much looking for ultimately some kind of breakout of the current low volatility situation. So that happened, and wow, did it happen. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Trying to get the charts up in the den now. Okay, great. We're again, once in a blue moon, Al Qaeda gets into the system at TFNN and causes some technical issues. But we're working on some drone techniques to try to, Tommy just bought a Hellcat drone with a submachine gun on it, so we're working on the eradicating that problem. So here's the S&Ps. We talked about this weekly close above there is going to be just completely damning for the shorts. And, sometimes I wish I would do what I say and not do what I do. Is that the way you say that? I talked about the volatility play, blah, 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 and then I got clipped at 2083 trying to be a hero and do a little bit of a contra trade against that inflection point. But that's okay. But again, what I'm trying to say is a lot of times when you step back, when you're sitting in front of these screens, it's very difficult. I talk about this a lot, to just sit there and not do anything. But stepping back, getting away from this thing for a while sometimes, and almost allowing yourself to only get into ripe, longer-term setups. Maybe watch Three Stooges, in the background, whatever, just to kind of not be completely glued in on the screen all the time. I've found is a lot better way to go. So, those long-term setups, letting them breathe a little bit also, is one of the best things. A lot of times when I was in Chicago, you have a lot of people giving you advice up there. That's the first thing I'll say. But if you're upstairs and you got kind of a floor of traders, people can kind of say, you know what, you're trading too much. Might want to give it a couple of days off. Some people might see that you have completely bolted yourself into a really good situation, and instead of watching it and not being able to stand seeing profits happen and wanting to take them immediately, they go, hey man, go down to Roly Poly, get you a sandwich, drink a Mountain Dew, eat a moon pie, just hang out. I'm given the substances that I can say on the air, by the way. And just kind of let this thing happen, and that's some of the best advice sometimes that you can give yourself is, you know what? I did my homework. I got my trade on. I've got the stop in. I'm going to go play 9 holes. Promise you. Sometimes that's the best thing in the world to do if you're trading. Let's hit a couple other things here. The 10-year, just insane. Just incredible. And here's the daily, just kind of starting to creep back above unfair lows on the daily profile. I will admit, you can kind of look at this and say, well, God, Logan, this thing's kind of going down to the level here on the weekly and then kind of not wanting to bounce. That's true. That's definitely true. But I'm looking at it as also, we are higher than former prints on this thing. If you look at this, higher lows, markets making higher highs. I still think this is the easy trade. And if you're wrong, that's what stops are for, et cetera, et cetera. So, all right. Okay, we got to hit gold. I didn't find an opportunity to really play this thing. I know we had a bounce from, 2017 or 1217 up into, good Lord, what is that? 1235 rounded off. I just, I didn't see a lot of leverage here for that to happen. And I was looking to try to, I got, again, what stops for? Had a pretty tight stop, 1238. I think I had to stop at 1236. I just didn't want to mess around with gold if it started caving in and, the flush sound would be very apparent. Didn't find a place down here to really back the truck up and get happy about it. But now, we're looking at 1226, and I kind of like how this is happening here. You've got an opportunity, I think, to try to do something long on gold. I'm going back to this thing right here. Let me pull up the scanner here. Let me go into the future section. And is John from Philadelphia with us? I'm flipping around the charts really quick, and I got to apologize to him. Here's gold. Still nothing, no harbinger of bad news on the long term on gold. I'll still stick by that. The long-term trend is still in force with this, even though we're below profiles here. So at that bottom, we're just kind of edging around there on the 1226. But I think you've got an opportunity. And why do I say opportunity here? I think we could easily explore the fair auction back up into that area, 1244, which will be pretty much right back smack dab in the middle of the daily profile. And I'm looking at that long-term trend still not in endangerment. And you've got a place to play defense here. So for guys who are trading on a short term, I think you've got a chance for this thing to pop again. I think we're going to have some bad news over the weekend. Fundamentally, it's just I kind of feel it. We got Memorial Day. A lot of times these guys race into longs before these 3-day weekends. Now it used to be like, everybody's hitting the eject button in case something happens over a 3-day weekend. I don't understand it. Cowboys, not smart. But anyway, if the equities market does relax a little bit here, the dollar relaxes. It looks like, we've got that kind of hint of a new profile attempting to appear on the daily. That could bode well for gold and other commodities. Taking a look at, sorry guys, let me get this back up. Let me adjust my charts. There we go. Okay. Taking a look at crude. All right. So, long term, no endangerment. I've been a little hesitant to buy this thing lately. I think when it got into the 47 area, I wasn't exactly excited about buying the breakouts. We made a bundle talking about this thing in the high 20s. It's been buy the dip, buy the dip, buy the breakout. And now I think the risk on this as of like the 47.48, 49.50 trade. The risk has to be long. Why? I mean, we've looked at the Canadian dollar. Canadian dollar kind of became valued yesterday, which was another good thing for gold. I mean, for crude. But as we look at this, we looked at the XLE. XLE kind of did its thing yesterday, but still not, lower highs, higher highs on crude. This thing's definitely making higher lows. We're going to talk about this a little bit more when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And we were taking a look at the XLE relative to crude. This thing kind of blew a gasket yesterday. So, but, still, again, not this thing kind of led crude down, kind of let it up. It's kind of languishing a bit here. Still not excited about the crude trade. That's okay. If we miss 46 to 50, I'd rather catch 29 to 46 than to only catch 46 to 50 like Goldman Sachs. How's that sound? I'm going to be Trump. How's that sound? I'm great. It's amazing. Here we go. Goldman Sachs, man, wow, just talked about trying to get a weekly close below 155. This thing elevated, to say the least. But nothing to write home about. This was kind of in the news yesterday, but nothing outstanding here. Just in the middle of a fair auction, stepping back and looking at this. What a charmed situation here relative to the S&Ps. Not so. That's still nothing to trade, in my opinion, yet. Just not an outstanding situation. Let's take a look at the Novi beans. Okay, so long term, this is kind of like the gold trade. Well, not exactly like the gold trade, but it's not showing signs of slowing down yet. You don't have a lot of things to worry about here. On the ultra long term, right? So, but what has happened, here's the daily, here's the regulator of the trade, if you will. I was reading somebody in the den. You met a Goldman compliance officer yesterday. You said Goldman calls are pretty dead on. Does that pee in the den? Oh, thank you. Yes. What a bunch of what? I don't know if I can say it. There's like 5 words you can't say on the air. Maybe can we spell them out if I can't say them? What a bunch of rude people. 7 words. Maybe you can type those out, Al, because I need to probably know those. Here's the unfair highs on the daily. So when we get, this is the way I look at this and these things. When we get daily closes below the regulation of the trade up, it's time to sit on the sidelines. When we kind of get back in the game again, into that kind of regulation of the trade up relative to the weeklies, this is just the way I do things. Then it's okay to get back in the water. But right now, you've got a new profile that's kind of edged a little bit lower. Long-term trend's not an endangerment. This 20, 30, 30, 30, 10, 30, 35 is still going to be big support here. But you've got, on the intermediate trade, you've got a little bit of resistance here. You got to pay attention to that. I think we've got a caller, Dave from Clearwater. Dave.
John, what's shaking, baby?
Hey, how are you?
I'm doing all right, man. How are you today?
I'm doing all right.
Yeah.
I'm thinking about the last what was it called? Potash joke you made?
Yeah.
I'm already thinking about that again.
I don't know. Can you say that on the air that you never traded it, but maybe created some along the way?
Yes.
Yeah.
Yes, I think we can say that. That's a cryptic way of getting under the radar screen.
Yeah. Not that anything like that was going on when I was growing up in Miami back in the 80s.
Not at all.
Not like it was the epicenter of importation in the United States in those days, or that you could go down to the beach and find bales floating in the water from where they tossed them out and the Coast Guard chased them. But
did you see that? Did you see that? That it was a special or a documentary, whatever they called it, Cocaine Cowboys. It was on.
Did I see it? Are you kidding me? The Dayland Mall. It's about a 10-15 minute drive from where I grew up. That was huge.
Were there people
huge.
There were people getting killed left and right back then, right down there.
Well, that's what started it. That's what
right.
if you really go back, that's what really got the DEA funded, because my father was a heavy contributor to the Republican Party and way up in the back in the 80s. Was participating in the party at high levels, let's just say, without going into specifics. And the word filtered back down to him because my dad was fuming mad. Everybody was. It was shocked, man. Back in the 1980s, John, no one showed up to a shopping mall with automatic weapons and starts mowing people down.
God,
you know what I'm saying to you? That's unheard of in the United States of America in the early 80s. Stuff like this didn't happen. And the word filtered back down that President Reagan was so infuriated, using words like, do these people think this is a banana republic? Do you think they're going to do stuff like this in the United States and get away? Absolutely. That's when the Air Force put your AWACS planes in the air. They started putting radar balloons up, and that was the beginning of the quote-unquote war on drugs, because Reagan was incensed that something like that was going on in the United States.
My God, yeah, different times.
So, yes, total. Yeah, I know. Everyone was freaked out, man. That's when the whole neighborhood watch deal started happening, and
just say no to drugs the whole night. I mean, yeah,
you got it. You got it, man. You hit the nail on the head. So, anyways.
Well, hey, look, what Aussie dollar? What is this on your mind?
Dude, it's on my mind. It's in my checking account, man.
Okay, all right.
Are you kidding me?
Okay.
Yeah, I've been trying to branch out, although I couldn't help myself. I'm back to trading natural gas again, but I was trying to branch out and broaden my horizons. So I've been, trading the pound, trading the Aussie dollar, and you're talking about the heartbreak as it reversed on it. But anyways, the point of my call is, to me, and from my knowledge of and things I've learned from Tom and Steve and Larry Pesavento, if you look at this on Forex, the Aussie dollar is making a 618 retracement off its recent run on the high. That tends to be points of good resistance. Okay, and we've had a nice flush down, which I know it's been heartbreaking for you, but it's put a big fat smile on my face. But I mean, we've got about 5 days of it going sideways on the 618, and then I'm looking at my handy dandy scanner, and I'm like, the more I play with this thing, the more I like it. And
it's addictive.
The point it is, man. I get to the point now, I'm like, all right, I'm trying to figure out if I could just trade just looking at this, like you say, and just, all right, I'm just going to look at this. I'm going to put on a trade based on just what I see without looking at.
And you know what? That sometimes that matrix kind of look is, there's something to be said for it relative to looking at the charts and putting a subjective, hey, wow, that looks, I mean, you know what I'm saying? It's something to be said for what you said.
But the thing that's difficult for me is that a lot of times, it seems to me that a lot of times, and this would be a safer way to go about doing it, is that a lot of the patterns I look for, they're I would call them leading indicators. They give you, you know what I'm saying? To use your terminology, it'd be, we don't have to find the exact bottom because the scanner is going to do it for us, or the top, you know what I'm saying?
Yep.
So a lot of times what I've been doing is I'm looking at these patterns and I'm waiting for profiles to develop on the 60-minute, the 240-minute, and it helps with stop placement.
Yeah. Can you hang on, Dave?
Yes,
we'll
sir.
Come back and I'll tell you, the Aussie dollar is at it hit a little bit of a floor, that 71.69 the other day. But let's talk about that a little bit more.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. I think we still got Dave from Clearwater on with us. Dave, you there?
Yes, sir.
Great, man. Aussie dollar. What was going on? I mean, this is, normally, you don't get haven't gotten really big moves in this in a while. It's been like trending down. We talked about nibbling based on this setup. If you can see it, this navigator higher lows, and then being able to kind of look at these lower lows going, okay, well, there's something wrong here. Getting back above 71.69 was kind of the trigger. And in 1 week, we actually traveled the entire fair auction, had about 300 pip move straight up in 1 week, which was kind of cool. And then really some supportive action. But when the back was broken of this thing for the final time, 74.81, that was, okay to be short, not okay to be long. The reason I'm saying all this is this 71.69 day from before. We kind of talked about this a little bit a week or two ago. This is kind of a support situation because this is where some action happened, back in February that was pretty important. So, are you on the short side, short-minded situation on this, or the long? Like, what are you?
I've been short since we had the move with conviction on April 27th, and then we had a nice little retracement of it at an intraday Fibonacci sequence up at the 618. And for me, that was the go signal. So I've been short really since about 76, 75 on Forex, and so at this point in time, I'm looking to flip it and go long because. I'm looking at what you're seeing. You've got that base pattern, or as Tom would say, building cause. That goes back from the February time frame, and usually whoever hits it then and goes long, they generally tend to come back into the market and hit it again. But the thing that I'm trying to wrap my mind around, as applies to the scanner and the reason for my phone call, is I'm looking at this thing here, and it looks like on the futures exchange, the 6A Australian dollar on the futures exchange, looks like it's trying to print a daily profile. There's an emergence. We see that peel back that you referenced, but I'm not seeing it on Forex, and I'm just wondering, is that to be expected if you see like a pattern, a profile developing on the futures, but not Forex, or what's your experience been with that, since it's essentially the same instrument?
Yeah. That's a great question, actually. We put these currency futures in here because people ask about them. I'll tell you flat out, with the currency futures, I think it's a great deal to trade currency futures. I think when people think about it and they go, wow, well, the liquidity might not be there, and blah, blah, blah. And it's, I got to pay X amount of dollars per contract, and I can go into Forex and trade for free. I mean, if anybody trades Forex out there for a little while, you know that nothing's for free, and they just
There is no such thing as free trades.
Correct. So they just widen the spreads. It's just like, you remember Brown and Company? Do you remember those commercials that used to come on for Brown and Company on the equities trades? It was like trade for $4 or something like that. This was back when I think everybody was day trading for 20, which was the good old days in the brokerage business. But what Brown and Company would do, I know you guys probably read about, different ways that this happens, but they would just sell the order flow. So like there was really, okay, yeah, you want to buy IBM. Okay, we're going to take your order. We're going to hold it. We're going to see if we can get a lower price and then give you the higher price. They'll fiddle around with the order. They'll farm it out to a market making group, or they'll market make it in general. And that's why Brown and Company could say they could basically pay you for the order. You didn't even have to pay them. They would have paid you to send them an order because they were going to monkey around with it and get a better price and give you a fill 3 minutes later.
Right.
That's the way that works. So on the Forex market, they're just widening the spreads, as you guys know. So maybe it's like a 2, 3, 4 pip spread or parts of a spread.
Yeah.
If you go to these aggregator sites, like there was one out of Charlotte, North Carolina called Advanced Markets. I'm not trying to advertise a firm right now, but they were one of the first ones that would really kind of aggregate things. So that brings me to my point, Dave. So one of the things that I think, and we get our currency feed from on some of the things we do from Bloomberg, but in this venue, it's from eSignal. And I think they do a really good job of aggregating a lot of different banks and getting kind of a consolidated volume print. Now, what we do on that is we do time at price on the currencies a lot of times instead of volume at price to do our analysis. On the currency futures, we do volume at price pretty much exclusively, but the volume, relative to when people are trading currency futures is not always there. Now, is it an arbitrageable situation? Yes. But I kind of look more so, all things considered that I just said, at spot currency charts. What you're seeing on the Australian dollar when it comes to this yellow peel back on the daily, that's a great sign. But again, I'm putting a little bit more weight on the spot currencies because we just get more information.
Right. Well, me personally, I like futures because you can get the volume data, and that's how I kind of cut my teeth, always on the volume data. But I look at thinking it from the standpoint of liquidity is significantly higher on Forex. So what I do is I put my patterns, because just, contracts expire, and sometimes depending on, it's not always a smooth, flow of a chart. So what I do is I chart on Forex, but then trade the futures, because we can also then put the volume data. And I realize that's just volume on that exchange, but it's been my experience that it tends to be a pretty good relationship. So that's why I'm looking at it, and I'm thinking to myself, okay, I'm saying to myself, we've got a 618 retracement, and the Aussie dollar is, it's hovering around there. That tends to be areas of support. So that's reason to go long number one. Reason to go long number two, the moves up from February 3rd. We're hitting some profiles. So then when I was looking this morning, on the Forex profiles, and I'm saying to myself, well, if I go off of just what I've learned just on the scanner, to use your terminology, we're below profiles on the weekly and daily. We want to block out longs. We want to sell retracements. And so I'm thinking to myself, well, does it really make sense necessarily to do that? But again, knowing that the scanner tends to be a slightly lagging indicator on the dailies and weeklies, so then I scan down to the 240 chart, and I'm seeing good solid support. Now, this particular information I'm citing at the moment on Forex scanner, but there seems to be good support at 71.76 on the current profile and 71.98 on the previous profile. And we know that the previous profiles tend to act as points of resistance, at least what I've observed on it. So I'm saying to myself, it might be time to the flip and go long, but then I noticed the peel back, and I'm like, well, what's that mean?
Well, tell you what, Dave, thanks for calling. I'm going to wrap up the rest of the show at the end. I'll expound on that a little bit.
Thanks, John. I appreciate it.
Yeah, man. Thanks for calling in. Okay.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. And we're finishing up with the Aussie dollar. The question is really, the things below profiles weekly, daily. Got a big number, 71.69. We've kind of rattled against lately, poked our head below there, and then got back above water. The really telltale sign for this to really get, I think you can play defense against that right now for a retracement back up into, some higher numbers, namely 73.42. And again, you don't always have to say, okay, well, I can't be long here. There's a lot of different ways to use the scanner. You're looking for some green shoots. If you're looking to do a contra trade against the kind of that trend down, and obviously Aussie dollar's been trending down, so you're looking for some areas to play defense against for some trading opportunities, not necessarily always investment opportunities, I would call them, or long-term opportunities. So, and just like I've looked at crude oil lately. I was like, well, God, we're above profiles, no endangerment of the long-term trend up. Daily's gotten it up, blah, blah, blah. But, we kind of look around sometimes and, look at other factors going on. Look where we've come from. Look at a little bit of fundamental news and some relativity trades. And, I've just kind of decided that the risk is to really continue to be long here, even though technically we're, doing our thing on the crude trade. Talked yesterday afternoon with Tom. A lot of things I just don't get to when it comes to looking at the scanner. There's so many different ways to use this thing, and there's so many bits of information. Like, you can put your own portfolio in, look at the short-term changes that are happening, long-term changes. We've got alerts going in. It's kind of messed up the server beginning of the week this week. I apologize for that. I'm trying to put them in. It's a lot of information because we're going to have them housed on our servers instead of your local machine, so they will, not be dependent on your machine stand-ups. But as we look at this, a lot of custom sorts. Tom and I were looking yesterday, say, like a strong downtrend. Let's just look at stocks that are still in a downtrend. In the scanner and the S&Ps, these are the ones. Downtrend resistance. These are stocks that have been in a downtrend that are popping their head up to inflection points where you can whack them again. We looked at BIIB yesterday. There's that on the daily. There's the weekly. Top. Stock been in a downtrend. Market dragged it up. These are some nice little ripe situations that you can play defense against. If it doesn't happen the right way, it is what it is. Here's let's just look at Dow Chemical here. Let's take that is not. Nah, I'm gonna stay away from that one. Just letting you know. Let's see. Verizon. Ooh, yeah. Ugly. 50. Defense around 50. 50.02 to be exact on the short side. Caterpillar. Let's take a look at that one. Yeah. I like this. 72.87, quick trade, short, defense against. Let's take a look at breakdowns. These are stocks that are there's 4 stocks by definition breaking down. Haynes Brands, Excel Energy, Yahoo, putting them right on the radar screen here. Here's a couple of others that, I've got, I think, all our custom sorts in here. Uptrend reversals. Okay, these are stocks that have been in a kind of a defined uptrend that are starting to show some cracks in the armor. Yahoo being one of them here. Norfolk Southern, too. There's the Yahoo breakdown on the daily. That's why there's a 1 there. Thanks, guys. We'll pick it up again tomorrow. I might do Larry's hour next, so we'll see.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.